Alrighty everyone, welcome to this next training video. Now we're diving into the rules, the strategy, the way that we use our powerful indicators. So mainly focusing on the rules that we have. So really, knowing whether or not we can actually enter a trade when we see a buy or sell signal or counter trend signal. We need to know exactly what our rules are and what they look like visually on the charts. And so once we have our rules in place, we can then start to apply a strategy, which is the way that we then use the tool to our best advantage. So I've got Dad with us again. He's going to be taking us through this step by step. Be ready to write it all down, and we will see you in the video. All right, Dad, over to you.
Right, well, welcome. We are now going to be looking at the strategy and rules. In the previous video, we looked at a big part of the strategy. So a lot of this will be looking at the rules. So, basically, the strategy, as we have mentioned before, is we trade with trend. That is the absolute key. If you want to be a profitable trader, you've got to look at the trend. And that's why, again, we called our indicator trend force. You want to trade with the force of the trend. And so when an indicator is trending or an indice is trending, that is the safest way to trade. So the strategy is trading with trend. Then the key part is we're looking for good setups. And so the key language we like to use is we're looking for low risk, high probability setups. You get many setups, but is it low risk or is it high risk? What is the probability of reaching, one of our take profit targets? Remember, we looked at this in a previous video, this sell on the NAS. This was at almost 5:20 on Saturday morning. And we can see there were different profit targets. What we want to make sure is that we can reach those targets. So we have very simple rules. Follow these 3 rules. You will be a profitable trader. And it may take a while to get there as you learn the rules, but all we have is 3 simple rules. And we have our table to help us. And we're going to look at 2 trades to show you how we apply those rules. So here, there is a sell signal. Now, our 3 rules are simply, we have got an acronym, we call it TAS, and it stands for, TAS. And each one of those letters means a rule. So these are the 3 rules. T is for the trend zone, A is for angle, and S is for space. So let's first look at the trend zone. Now, one of the keys, because you want to trade with trend, if, for example, we're looking at the 1 minute, the weakness of the 1 minute is that you do get false signals. The strength is there's more signals, and there's a great opportunity to trade, but there is no indicator that cannot eliminate false signals. The buy signal is a huge part of the code, and we've eliminated a lot of false signals, but we still need to apply the rule of the trend zone. So the basic rule is, you won't get a sell signal unless the trend zone aligns in the 1 minute. So again, the trend zone is once we get a separation. So here is a bearish separation. We can see that a red trend zone begins to form, and it's got a match on the MACD. So you won't get a sell signal if the MACD, for example, is blue, and you won't get a buy signal if the MACD is red. So basically, you won't get a signal generated on the 1 minute unless these line up. So this is a good one. We can see we've got a crossover on the signal, and on the MACD at the same time, we can see we've got a nice bearish circle crossover. And again, what we like about this indicator, you could have been warned the candle before, there's sellers are pushing price down. There's a little wedge. And at the same time, re-enter reverse, we got a triangle down, which means price is moving down. But the key rule with the trend zone is that you have to get confirmation on a time frame that is round about 3 time frames higher. So if we're trading on the 1 minute, it's not good enough. So here's an example. Here was a sell signal, but look, it bounced up. And if you didn't apply the rules, you would have made a loss there. So let's just click on our 3-minute screen, and we're going to show you how this works. So I'm going to draw a vertical line through the sell signal. So here's a little vertical line, and I put that right through the sell signal, and I'm going to sync that globally, which means we can see on the 3-minute what was happening on the 1 minute. We can see on the 3-minute. And so we'll talk about the table in a second, but you can see as we got a sell signal on the 3-minute, the MACD was crossing over. And we look at the 1 minute, on the 1 minute, on the 3-minute, we can see we got a crossover on the candle. And then again, look, on the candle, we can see we've got a bearish crossover circle. So that fulfills the rules. Now, this trend table now, the force table, this is true for, further down the track. But we can look simply, when we get a sell signal, we just look. What you want to see is all red on the 1 minute, and again, all red on the 3-minute. So this table makes it very easy to follow the rules. Ideally, if it's red everywhere, that means a very strong downtrend. But the minimum for taking a trade is we want to see that red and also the 1 minute red. So that's why I've actually recently blown my table bigger, because I find it so useful. So we use this table, the force table, to help us to make trade decisions. Likewise, if you're trading the 3 minute, we tend to look at the 8 minute. So if the 3 minute needs to be all red for a sell, and likewise the 8 minute needs to be all red for a sell. So the first rule then is the trend zones must align. The secondly is the angle, and that is the angle of the 21, this white SMA or simple moving average. And so if it's pointing down, it's going to be dark red. And if it's a sharp angle down, then it's going to be bright red. And so this table tells us a lot about the angle of the 21. So that's telling us the MACD is crossed over. That's telling us that the trend zone crossed over. The 21 is telling us the angle. So on this trade, this would have either been, dark red or bright red. And so the brighter the colors, the stronger the trend. And so we simply look at the table. Again, remember, zone alignment is, are we below, above, or in between our main moving averages or our main trend zones? So in this case, we can see on the 1 minute, this would have been red because we're below all the main moving averages. And likewise, at this time in the 3 minute, that line also would have been red, would have been below all the moving averages. So again, this 21 is giving us the angle of the 21. If it's down, it's red, strongly down, bright red. If it's up, dark green, strongly up, bright green. So hugely, hugely helpful. Now, so we got the first rule is the trend zones, they must align. Second rule is the angle of the 21. They must also be pointing in the right direction, because price will always pull back. So here's an example. Okay, we wouldn't have taken this trade, but you can see, look, it looks like price is moving up, but look at the angle of the 21 is pointing down, and that'll always mean price will pull back. And often when you do our live analysis on Friday mornings, I'll often say, I'm not going to touch that trade because the 21 is pointing at the wrong angle. So all these columns are crucial for profitable trading, but I tell you, the 21, I'll never fight with the 21. That angle is crucial. So first rule, trends must align. Second rule, the angle of this 21 must be pointing in the right direction. Now the last one is, I wish I could put it on the table, but it takes basically visual judgment, and that is space, S for space. And so you have to see, is there space? Let me just delete this line now, get it out the way. Is there space to TP1 at least? So that's a 2-to-1. And so here we can see this rule wasn't in place strongly because we've got a daily pivot in the way. We can see this green line, price bounced off a 2. So if I took that signal, I may be a little nervous. We can see it's been a little bit of time there. And so there's no problem entering late, provided you enter on a signal. So there would be a valid reason to wait. And you could have entered here. Look, when it goes bright red on the histogram of the MACD, you could have entered over there. That means there's plenty of energy. So we always look to see if there's space. So we want clear space, at least at TP1, or we can wait and then wait for some form of signal before we enter. And so that you could have waited on that trade. And even if you had waited for the histogram to go bright red, there was still was, look, 70 pips in that trade. So there was still a lot there. So those are the three simple rules. We look at the trend zone, we look at the angle, and we look to see if there's space. Now let's look at that buy. We looked at a buy earlier. Where was that? Here we go. Let's have a look over here. So let's look at this buy. I'm just going to put a vertical line. Let's analyze this signal. This is a really good signal. So this really would be, and let's just sync it globally and look at 3 times higher time frame. So if we just go back, look for this buy, there we go. So this is the same time. So again, we want to look at a time frame that is 3 times higher than the one we're trading with. And again, we want to apply the rules. So firstly, trend zone alignment, T. So we can see you won't get a signal unless they align on the 1 minute. So basically, we never fight the MACD. So that's a great signal. We got buy and we got a crossover, meaning it's a good place to enter. What's also good about this trade, we can see we have different colors on our buy and sell signals. If they're bright green, it means a strong signal. And if it's dark green, I don't know if there's another example. There's an example. That's not a strong signal. It's dark green, but it's still valid. There's bright green and a nice move up. So if it's bright green, it's got a high probability of moving. And so we're looking here at the 1 minute. Then we're going to go to the 3 minute. And firstly, let's look at the trend zone. Is the trend zone aligned? And yes, we can see there's separation there. Although they're close together, we can see we had a bullish circle. May not be too clear on the zoom, but there's a bullish crossover there. I mean, it was a very gentle trend, but there was still separation. And so we definitely get the 1 point for trend zone alignment. Again, if the force table was applied to this time zone, we would have green on the 1 minute and green on the 3 minute for both the MACD and the trend zone. The next we look at the angle. Normally the indicator would tell us if it's dark green or bright green, but we can see we're moving up. That would have been green over there on the 1 minute, and our angle would have been also up there, would have been green on the 3 minute. Then we also look at space. Is there space? This is a great example. Let's look at this clear space. There were no moving averages in the way on the 1 minute. And so we can see price went up. How much was in this trade? 91 pips. We can see how price does respect. So there was a price signal, but look how it hit that daily. This green line is a daily pivot. It bounced off there and came down, got some liquidity, and then shot up. And so that's why we always look for space. So this would have easily reached TP3. The angle is good. So we met the 3 rules for this trade. The trend zones were aligned on the 1 and the 3 minute. The angle was good on the 1 minute and the 3 minute. There was also space. Now we can see this moving average was in the way on the 3 minute, but price still managed to break through. Then we do look at other things. A good thing about this trade, remember I said that the 55 has got 4 colors: dark green, dark red, and bright red. When it changes to bright green, it means strong trend. So when you get a buy signal and at the same time, the 55 for a buy is bright green, that's guaranteed it's got a lot of energy. So although we had this moving average here, there was some cause for concern. The fact that we had a bright green 55 mean there was a lot of energy and a strong trend for that price to move up. So that's how easy our rules are. 3 simple rules, 3 points. TAS for TAS, trend zones must align on a high time frame. The angle of the 21, that is the white moving average, must also be pointed in the right direction, up for a buy, down for a sell. And then finally, space. Is there space for the trade to move? And that's what will make it low risk, high probability trades. So that's how simple this strategy is. If you stick to those rules, you will find you'll soon become a profitable trader. So I'll end it there. I've discussed the rules. Very simple, very easy. Apply the rules, you'll be profitable. And I'll hand back to you. Thanks, Ty.
Thanks, Dad. That was absolutely brilliant. Guys, those are our rules. TAS, 1, 2, 3. Simple as that. Obviously, so much of it is now built into the indicator itself. Like Dad said, space is the one that we really got to look for. And so watch out. In the future, we'll do another whole breakdown. We've done in the past. We'll do it again on the counter trend signals and how to apply the rules to those. But for now, that should give you clarity on exactly what our rules are so that now you can rock and roll with the indicator and go and have some fun with it in your own time. So we'll leave it there and we'll see you in the next one. Good night, everyone.